Good morning, everyone, and welcome to our webinar. My name is Courtney, and I'm the Marketing Coordinator here at AIM. Today's webinar will be recorded and later posted on our website. This does mean that all attendees will be automatically muted so that we can get a quality recording. If you have any questions, feel free to type them into the chat box, and we'll try to answer them throughout the presentation, but if we're unable to get to all of them, we'll have a member of our marketing team reach out to you individually to make sure that you get those answered. Our newest agent resource, the 2-Minute Minute, is in full swing. The marketing team is bringing you quick ways to talk to more prospects, write more business, and grow your agency. We're posting new videos every Monday and Wednesday, so check out our social media pages to see what you might have missed. We have Facebook, LinkedIn, Instagram, and YouTube. Some of our episodes even reference exclusive offers, so you'll want to check them out. Our next upcoming webinar is on June 21st at 9 a.m. Pacific, and it'll be presented by AIM's Don Erickson and One America's Bridget Collins talking about One America's LTC solutions. So with that, I'm going to hand it over to Mike so that we can get started.
Morning, everybody. Glad that you're able to make your time, make time available. We know you're busy. We appreciate you carving out that time, and we know that this presentation by the Nationwide Life team is going to be something that will help you get started quickly with this opportunity. And we're really happy to have that opportunity as the long-term care market continues to gyrate and exposure and awareness about long-term care continues to grow. It's more important than ever to have a widely diversified portfolio, and adding Nationwide into the mix for us was really important because you were clamoring for it. So we're happy to be able to do that. So we're joined here today by David Lane, Rodney Cyrus, and Jeff Sabota. David's going to be the leadoff man here, and then he'll be switching over to Rodney in a little bit. Dave, appreciate you all joining us here. I'm going to go ahead and turn it over to you and let you guys take it away. Thanks.
Thank you, Mike. Thank you, Courtney, as well. Appreciate the opportunity to be here today. Hello, everybody. My name is Dave Lane. I am the Regional VP for our Southeast Territory. Thank you today for joining us to learn a little bit more about Nationwide's easy-to-manage cash indemnity long-term care rider that are available on our fixed life insurance solutions. Tag teaming this duty today with me is my colleague and friend, Rodney Cyrus, who covers our Northeast Territory. The goal for today is actually just to kind of give you an overview of Nationwide, some of our product solutions, and so forth. So what we'll be talking about is why Nationwide, why you should be looking at and considering these typical long-term care solutions, our wholesaler contact information, so you have available for you and see who covers what and what states they cover and the contact information. We will also briefly talk about our product overview, so our product portfolio overview, and then we'll dive a little bit deeper into our long-term care riders, and then I'll hand it off to my friend and colleague, Rodney, to talk about some of the Nationwide resources and tools we have available, as well as how to illustrate, application process, and some digital marketing. So with that, I am going to share my screen here in a moment and get off camera, and I will start presenting for you. So just give me a quick second here and we'll get started. So why Nationwide? I mean, Nationwide is a long-standing company. It's been nearly in business for over 100 years. We've been in the life insurance industry for almost 90 years. We are a US-based mutual company. So we're making products for our policy owners and not necessarily for Main Street or Wall Street. We are also a highly rated company, according to AM Best, Moody's, and Standard & Poor's. We have never increased our cost of insurance and our life insurance policies in the history of the company. As you will see here on the screen, our risk-based capital is a little over 500%, so closer to 600%, the 566 number. And what does this mean? If I break it down in simple terms, for every dollar we bring in, we have $5.66 sitting in reserves to pay claims. So you know it's a strong company when you have the assets and resources in the background to pay the obligations that you set up at the beginning when someone puts a contract in place. We provide long-term care solutions since 1999 when we initially came out to market with our long-term care rider on our fully underwritten life insurance products. In 2008, as you'll see in this chart here, part of the history, you will see that we actually survived the financial crisis without taking any government support. So I think that's kind of big to understand that in those realms as well. Not only are those big things, but on top of being a great company, Nationwide is a great company to work for. We're a Fortune 100 company, number 83 on the Fortune 100. We're number 21 on best companies to work for. As you can see on the screen here, Nationwide gives back to the community, not only as a company from the Nationwide Foundation to the Nationwide Children's Hospital of $140 million, but our employees, as you can see through United Way contributions, have given back over $6.7 million. So we're a giving company as well as we are as a sound company making great products for our consumers out in the marketplace. The next question is why should you want to look at these type of solutions? I know for the majority of people on this call, fully underwritten life insurance with a long-term care type rider is really probably less than 1% of the business you even do. But these type of solutions are going to help you grow your practice. They're going to help keep competition away, because if you aren't incorporating these type of products into your portfolio, or at least understand them, there are other advisors that are out there and agents that are out there that are showing them. It helps build stronger relationships for you and your clients. So if you're selling a long-term care rider, potentially a life insurance product with or without a long-term care rider, you are building stronger relationships because you're serving more than one thing and one purpose and need and goal for your clients. And the bottom line is too, is not one solution fits every client's need, right? Whether it's standalone, it has its own traditional long-term care, has its place in the market for each individual client, but another client that may not reside with them. Maybe they look at the linked benefit products that we talked about on our call last week, which there are Care Matters solutions, or maybe you have individuals that would gravitate more towards the story we're going to be telling today, which is our life insurance with our long-term care rider. Now let's take a look here about who your contact is. So you can see the chart here in front of you. This is our state chart broken down to 3 different territories. Our West region here is covered by Nate, along with his internal counterpart Wade, and our Care Matters counterparts Christian and Luke. We have the Northeast at the top there, which is actually covered by my counterpart Rodney, who will be talking here later, his internal partner Austin, and our partners from our Care Matters distribution, Kyle and Luke. And I cover the Southeast, along with my internal partner, Justin, and Kyle and Luke help us with from a Care Matters perspective as well. So let's take a little overview here. We're not going to do a deep dive into it, but we're going to talk a little bit about the Nationwide life insurance portfolio. We're going to focus on the fixed products, so ignore the variable portion of it, but I wanted to keep that headline up here so you can kind of see what the objectives and some of these other columns mean. We talked about the Care Matters solutions on our last call, so we're going to skip those for this particular call. And we're going to talk specifically about our 3 index solutions. So we have our accumulation, our protection, and our survivorship. And then we'll talk briefly about our no lapse guarantee UL, and then we'll talk about our term portfolio, and then underneath here is our whole life portfolio. So in a nutshell, if we talk about an indexed universal life policy, the difference there between maybe some other policies that you're familiar with is really the indexing strategy, which credits the actual policy itself. So the cash value component isn't derived of an interest rate that's determined by the insurance carrier. You have indices you get to pick in. One of the most commons is S&P 500. And that is one that you can utilize and mimic for the cash value components. The beauty of an index strategy is most of them have what they call a floor. So 0 is usually the typical floor. So you're never going to see a negative crediting situation in the policy for that given year. So like other solutions, you're not going to see a negative 20% rate of return. The return will always be 0 or greater. Now, the trade-off in some of those situations is you could be dealing with an indice that does have a cap. So maybe let's just say it's a 9% cap. If the market or that indice returned 20, you're not getting that full 20. You're being capped at 9. The nice thing about some of Nationwide solutions, especially if we talk about this accumulator, which is an accumulation-based, cash value-based story based upon building cash value, you can see we have 7 uncapped scenarios and indices in that particular product solution. So you will participate in the full upside of the potential market. And some of those also have higher participation rates that you have as well. We also have what they call volatility control options, which what happens is it really kind of, what I call puts bumper rails on it. So if you're familiar with bowling and you put the guardrails into it, essentially kind of just make sure your gains a little bit more steady. You don't have the big ups and the peaks and the big downs and the valleys. And so it makes it more for a long-term steadier growth potential. So as I mentioned, this accumulation product, it is the accumulation base, so it's based upon growing cash value. We do have a protection-based index solution, which is more geared towards death benefit. It does have accumulation into it, but this particular protection product has a guaranteed death benefit component to it that you can extend for the lifetime of the policy, or you can customize it down just to the base initial death benefit, which can be up to 20 years. We have the survivorship indexed universal life policy, which is similar to the protection, except it's on 2 lives. So a death benefit's not paid out until the second death in that particular policy. We have a no lapse guarantee UL, which is almost like a permanent term product. You're going to see that the cash value in that policy fast goes down to 0, but it does have a guaranteed death benefit that you can run out to age 120 and beyond. I'm going to briefly talk about these other 2, but then go back up because these are the ones that I want to focus on. We do have a term suite of a 10, 15, 20, and 30-year terms. The nice thing about our term products is they may not be the cheapest ones out in the industry, but they're really built upon the features of the policy. So we have the ability to add some living benefit features onto there with our chronic, critical, and terminal illness riders, as well as the convertibility features that we have built in our products. We allow you to convert your term product into any one of our fully underwritten life insurance products outside of our survivorship product and the Care Matters solution. So those are great convertibility features that you have built into the product. We also have a whole life suite, which can be a 20 pay or a whole life 100. So you pay to age 100. That is a non-participating product, so it doesn't have dividends like some of the other whole life products out in the industry. So I want to go back up here, and I really want to focus just on this block here. So these are the index solutions and the no lapse guarantee solution we talked about earlier, because these are the solutions that carry our long-term care rider. Okay, so those solutions all carry our long-term care rider, but they work a little bit differently. So we'll talk about our long-term care rider briefly, and then we're going to turn it over to Rodney here in a little bit, who will talk about some of our resources and tools we have available, and he'll show you our illustration system, and he'll walk through the long-term care rider more visually than what you're seeing here on the screen. So from a long-term care rider, our fully underwritten single insured products are going to carry, this particular solution that we have right here, which is our long-term care rider 2 solution. We have the ability to add that onto our policies at issue or after issue. We're one of the few carriers in the industry to allow you to add that rider on after issue. So you can see the available ages for this product is age 21 to 80. We have up to 5 underwriting tables that you can underwrite. So it's anyway, all the way from preferred all the way down to table E as an Edward. It does have a couples rate on it. Premium options are flexible. You can do anywhere from a single premium all the way down to paying for the lifetime of the policy on a monthly, annual, quarterly basis. So the flexibility there is really great. And you have the ability to create some additional flexibility. So a long-term care rider is really an acceleration of the death benefit. So for example, if I have a $500,000 death benefit, I can put up to a $500,000 long-term care rider onto the policy. And if I ever need care, I accelerate that on a monthly basis, dollar for dollar. We have 3 ways to accelerate the death benefit. We have a 2%, a 3%, and a 4% rider. So our 2% rider is going to accelerate the death benefit over a 50-month period. So if I take 2% of that 500,000, it's going to accelerate at $10,000 a month. If I chose to accelerate that 500,000 at 4%, I can accelerate $20,000 a month, but only for 25 months. So you have the you can have the ability to take up to HIPAA for our rider. And how does that work? So the $500,000 number is not really a great example, but for example, if I took $1 million death benefit and I wanted to accelerate it at 4%, that would give me $40,000 a month for 25 months. So we would allow you to take up to 2 times the HIPAA amount, which is a little over $25,000 on a monthly basis. Not saying you need it, you can take less, you don't have to take that month, but if your bills and costs were over the HIPAA amount, you could potentially take it up there as long as your initial benefit is above that. So we talked about the $500,000 option. I'm not trying to get the weeds here, but if we did the 2% rider that was only $10,000, we're only going to allow you to take the $10,000 because that's the benefit. We're not allowed to take more than that. So it's always going to be the lesser of your monthly stated benefit or double HIPAA in that particular situation. So we also do have a 10% residual death benefit. So an example of using $500,000, if I used all $500,000 for long-term care, there is no additional money left for long-term care. But I do have a final payment that will be paid out to my beneficiaries upon my death of $50,000 in that particular example. So if I think about our long-term care rider, cash indemnity, we allow, since we are cash indemnity, we allow for the benefit to be paid out for informal and family caregiving being the main plan of care, that 10% residual death benefit. And then another component is our international benefits. 100% of the benefit is available for international benefits for long-term care needs. So that rider itself is available for, like I mentioned, our accumulation IUL, our protection indexed universal life solution, and our no lapse guarantee universal life solution from a fixed product standpoint. Our survivorship product has a different rider to it, and that's in that second column that you see here. All the bells and whistles of the cash indemnity and formal caregiving, 10% residual death benefit, those type of things all hold true, except for the age is 35 to 75. And then the other instance here is we don't have a 2, 3, and 4% acceleration option. We only have a 2% option. And so how that actually works, it's not a shared pool of money. So if you have a $500,000 death benefit, each individual could have up to $250,000 for their long-term care needs, accelerated at 2%. So I know I've thrown a lot at you, and a lot of it's just data that's on the sheet. Now I'm going to take the opportunity to turn it over to my friend and colleague Rodney, to kind of go over through nationwide resources and tools and walk you through the illustration so you have a little bit more visual presence going on for that.
There we go. Sorry about that. I was muted. I was chatting. Just wanted to stop in, say hi. How are you guys doing? Introduce myself. My name is Rodney Cyrus, as Dave said. We're about to go over how to access the Illustrator, a little bit through the Illustrator. Going to look at the LTC writer as far as what it means, you know, in the Illustrator. It's great to see it on paper, but it's better when you can actually see what you're trying to look at. So I'll get my my mug off of here and see if I can't switch to my second screen for you all. Let's see. Monitor 2. Alrighty. Can I get any verbal confirmation that we can see my screen over here?
We got it.
Great, thank you, I appreciate it. So as we were saying before, we want to take a peek at accessing everything. So for us as financial professionals, we're going to be going to nationwidefinancial.com. And most of you may or may not be signed up for it just yet. In case you have a handheld in front of you and you'd like to just take a peek at the website while we're walking through things, or just to bookmark it in your phone, here's a copy of the of a QR code. This should take you to nationwidefinancial.com, and I'll leave that up here for a second or so. All righty. Hopefully, if you all are joining me, we are here. Now, I've already pre-logged into mine, but there is a login up in the top right corner. And for most of you, it'll be a login or sign up session. So if you haven't signed up for one, that would be the time to do so. But once we're here, here's the main landing page for us. And I'm going to take us to the Illustrator first. So under products, you'll see our different suite of options here. We're going to click on life insurance, and directly underneath of it, your eyes will follow you to the illustrations hot link. Once we're over here, we're going to have two options for you. You can essentially download the Illustrator yourself and essentially have it on your desktop. That's, I would say, the preferred option. That way you can access it when you're not connected if you need to. We do push updates to it, so don't worry about that. You will get notifications anytime we send an update through to update the software. If you're in a pinch and maybe on a different device, you can access it via web browser, and that would be the link here that you could do that. It's just going to house it inside of a web page for you, as opposed to being its own individual app for you. Now, that being said, mine's already downloaded, and I'm going to come in here to our Nationwide Illustrator. And I've already preloaded some cases, but I'm going to open up another one just to kind of show you a brief run through of what it's going to look like when you see it for the first time. So it will open up here. It's going to default to one of our products called the No Lapse Guarantee. And mine defaulted to Texas because that was a preset that I'd already had in here. But when you come into it, it's going to be right down the middle at Massachusetts. So you can change this. Just to give you a brief idea, I wanted to cover two quick things. Let's make it yours. One, the advisor name up here in the corner. It's a nice touch for you to be able to add first name. Anything with an asterisk has to be added for you to move forward. The state license stuff, you don't need to add that. Some do. I would say 99.9% do not. But as far as like broker dealer, your office name, you can put what you would like here, or leave it blank and just put the street address and contact information. So anything you would want on the cover page that the client is going to see, and any information, contact information that you would like them to use to contact you, it's good to have there. The other thing too, I'll show you to make it yours a little bit too, is up here in the tools section. I don't want to get too far in the weeds, but you can come up in here and select your options. So tools, options, and now we can change what state you open it up to. So if you live in the state of Washington and you want it to just open up to the state of Washington every single time you do that, by all means. If most of your clients are paying monthly, you know, these are little things that you're opening up the illustration, you know, 100 times a year, it's saving you time that time around. Now, tax bracket, I'll completely ignore that. That doesn't really change anything. And then this right here is where you can set yourself or other people in the office as the default advisor, to where I have advisor names in there from advisors that I've worked with previously, but you can add yours. And then that way, every single time you open up your Illustrator, it's going to be on your favorite product in your favorite state with your premium mode. So those are just little easy things that are quick and changeable that can help make this a lot easier. Now, so as Dave was talking about earlier, we were looking at potentially a long-term care rider. So when we come into the Illustrator, you can change the product and concept from the big blue button over here to change, and it's going to bring you a list of options too to look at. Now, I have mine on for individual and survivorship. As Dave alluded to before, we do have the long-term care rider available for the survivorship product. So if you wanted to just hone down and look just for that, you'll be able to find it right there as well. This stuff I really wouldn't mess with. Just kind of leave it at the ledger, and you'll be able to pick the product that you want for there. So in this case, we're going with the IUL protector. And from this point, once we've got our product, I'm going to bring your eyes down over here to this case design. This is where we're going to input everything. For most people who've ever done an illustration before, I don't want to bore you to tears with it, so we'll just gloss over it because it's pretty self-explanatory. Issue state, whatever state you would want. Working with my colleague here, Dave Lane, male. I have no idea what his birthday is, Dave. I guess we should be better colleagues. I should know your birthday. But he looks like a preferred non-tobacco kind of guy. We're looking at this $500,000 face amount. And as far as the amount of coverage that we're looking for. Now, what I will say is GPT CVAT, most of the time the system is going to default to GPT. If you have a question on this at all, give us a call. Either us or our internals, we'd be happy to help, walk you through kind of when to use CVAT. Now, in this case, I'm using it because we're using the guaranteed rider, but in this case design, we're saying that it's very important that we have a $500,000 death benefit. And what I'm going to do is actually jump to the riders page and make more sense. So I'm adding the extended no lapse guarantee. And all we're essentially doing is what Dave said before is turning it into like a no lapse guarantee. It's a permanent term. It's a premium based contract. As long as you pay the premium illustrated, the death benefit and long-term care will be guaranteed as well. Now, we do have two versions. I'm not going to get too far in the weeds on it, but I just wanted to throw out there that we're adding a long-term care rider at 2% equal to the face amount of $500,000 with that preferred rating. And these are options. So if anyone who is standard or better, they're on the LTC rider, they're going to get the preferred rating. So life insurance, non-tobacco standard or better, that's an automatic preferred non-tobacco when we're talking LTC. Over here, I did want to bring up the NLG because if anyone does want to add it, you have to add it at two places. And that's why this is a good one to use. And also, too, and in the premium side, You can use the drop-down arrow here, but if we're really wanting to dial in the years of premium, so maybe Dave in this situation only wants to pay premium to age 70, instead of clicking in here, I'm going to click this calendar looking button. That's going to open this up. Now this would be a solve, but I already went ahead and pre-changed it to this extended no lapse. And from here, you'll see 1 to max. What I like about this is if you're using this and you just want to say, hey, we're going to pay for 20 years, you can put 20 in there and illustration will do as is. So we're not having to kind of figure out our math. If we just wanted, in this case, we talked earlier, I want Dave and I previously spoke to, we're going to look at age 70. So if you throw an A in front of whatever number you're wanting to, the software will know that you're going to a specific age, and that does make things a lot easier for us. Under the extended no lapse, or under the premium section, this is where we'll have our option of premium mode. Annual, semi-annual, quarterly, or monthly. I left mine at a default of monthly. You can mess around with when the premium starts, or if we have a lump sum. In this, I did do a 1035 just to show us, what's going to happen here is nothing will populate until you click the button, and I just do a number in there for us here. But to give you an idea, if you want to do a 1035 into it, here we are. Anything on this stuff that you would want to change, if you have a specific interest rate you would want to use, with IULs, it's always good to maybe do a stress test. So run ours and the competitors at the given illustration rate, come back, maybe drop it to 4% and see how it really does. Because if we're planning for long-term care, obviously we want to be prepared for the worst scenarios, and seeing how that product will hold up under maybe some leaner interest rates can give you an idea of how the mechanics of that product works. Now, I did jump ahead to the riders, but hopefully it makes sense now, because this right here, the extended no lapse, you select it here, but if we don't put it in this box and we just leave it at solve, the software will not solve for the premium to satisfy the rider. And this is a common mistake with early illustrations, and that's why I thought this might be a good example just to put it in everybody's brain earlier. If you're running these and you're adding the rider to guarantee it, you got to do it at 2 places. And this is a good reminder to do that here. Now, we do have 2 options, one at 120, and if you want to, maybe the client's not interested in guaranteeing it past age 90, you can pick this. However, it's elected at issue. So if the client wanted to, they get in their 70s and they decide that they might want to go to age 100, they're not going to be able to extend the guarantee to that. In this option, this is the maximum age, we can dial this down, like I said previously, to age, let's say 90, and this client then decides in their 70s that they want to bump it up. We now have that option because the maximum age is 120. But just another tool to show you how we can guarantee it to 120, or we can dial it back if we need to. When Dave was speaking on the long-term care rider and the 2%, 3%, 4%, you see you'll be able to elect that here. It doesn't tell you the months right here, so it doesn't say, hey, 2% for 50, but it'll tell you that in the illustration when we look at the LTC narrative. So I'm going to hit calculate on this. And it is taking its good time. Now, this is very important. You're going to get a message log when you run your own illustration. Take a look at the messages. They're always good. Sometimes they don't mean anything. Sometimes it's very important information. And you may even get a big red X here sometimes that it's like, you can't run it the way that you did. You got to change something. But very, very important. Always check the message log. It's easily overlooked. I find that once people kind of get comfortable with it and they start figuring out what they're doing, that's when they start missing the message log. So you'll probably remember early on, but maybe forget once you get more comfortable with it. Again, You can toggle through what pages or what sections of the illustration you want to go to. You know, typically the money one is the tabular detail. Now I went to the non-guaranteed because this is assuming the interest rates that we use for the illustrator, but we added that guarantee on it, and we want it to go to age 100. So this is great. If everything goes good and we're earning that 6%, we can leaf through and kind of get an idea of, you know, the net surrender value, how our cash is doing. This middle column here is an alternative interest rate. And if you ever have any questions on that, it's also here. So essentially, if everybody, or I'm sorry, if the index and the fixed, it basically just put everything in the fixed, how would the policy do at 2.75% versus investing it, or not investing it, but allowing it to participate with the index at 6%. You can see here. But what we're really worried about is, so actually we can see here where it kind of starts to lapse on us early if we left everything in the fixed, and you'll see the asterisks that start popping up. And if you're curious what those are, it'll explain it to you at the bottom of the page. So the death benefit remains in force due to the extended no lapse guarantee rider. So, all right, okay, it worked. It worked for us in that scenario. And if you ever want to check it out right, this is the worst case scenario. So the guaranteed is you earning no money in your index, and the guaranteed minimum that we have written into the contract for the fixed interest rate. And it's going to look bad, but it's also nice to point out to the client of showing, hey, in the worst case scenario, if you get no money in your indexes and they drop it down to the lowest interest rate possible, because I've added the guaranteed rider on here, we can see how, even though everything else is going, you know, if you're earning 0% in some indexes, there's probably some bad things happening in the markets for this long, where it's going to the age that we asked it to. In this option, the other thing is I want to point out for us all, you see I have these plans up here. This makes life easy for you. So last one I'll throw in here. When you want to run a different, so we ran this at 2%, but I want to see what it might look at a 3%. When you do add plan, new business plan, this new plan, same client data, it's going to copy everything we did. So here's Washington, Dave, male, birthday, rate class. And because I just wanted to change one thing, I'm going to come in here and run the 3% now. And now we can take a peek and see what the premium would be and how the difference would be. See, it bumped it up to 542, and we have these comparisons here. We'd also talked about maybe positioning or looking at a survivorship. To give us an idea of that, we'll take a look at one here. Again, add plan, new plan, same client data, and then we're going to find the survivorship. Now, this one, as you can see, it's going to populate a second individual. Now, like Dave said, it's a little bit different of a rider. So in this one, I added Dave's fictitious spouse's name with a fictitious birthday, and we're essentially doing the same thing. 500,000. The premium, we have the same guaranteed rider. So to guarantee the death benefit and the LTC, we're still paying it. And then here, we're still going to wage 120, stopping it early. They both want the maximum amount, and we can calculate this. Now, it's going to be an LTC rider of 500,000, but divided among two people. So Dave will have his own bucket of 250,000, while his wife will also have her own bucket of 250,000. If Dave passes away peacefully, never uses it, she doesn't get access to that money for LTC, but it's still there in the form of the death benefit. And it will show you here in the with the LTC rider, showing a 250,000 for each. And this drops the premium down a little bit more. And this might be a way, if one of them is close to being uninsurable, we can sneak two people on one policy potentially and go that route. The other option, last thing I wanted to touch on, as Dave said, it's a threshold, right? So if the LTC rider, we're looking at 500,000, it's just really not, it's really kind of out of the client's range, or maybe they don't need that much. This long-term care amount, we let to equal the specified amount. So the last thing I'll do is I'm going to throw in, maybe Dave decided after looking at that, he can get away with just doing 250,000. And we can run the illustration, lower the LTC amount. That way, if Dave does go on long-term care claim for the 250, he would still have another $250,000 left of death benefit to pay whatever it is that they needed to pay off, house, boat, cars, whatever that may be. Again, if we're looking at the illustration, we want to take a look at the message log. That's a good habit to start. Because I added the guarantee rider, I personally take a peek. Oh, actually, great thing. Need to call this out. 1035s are like to like. So if Dave has an individual whole life that he wants to 1035, we can do that into a life insurance. We can't do it into a survivorship. It has to be like to like. 2 owners, 2 insureds. He can transfer it from a single insured policy to his single insured policy. But if we're going to then move him into a joint policy with his wife, he'd have to pay any potential taxes on that, surrender it, and then they could pay it as premium. They just wouldn't get the tax shelter of it. So as you can see, that actually may change the premium and change it here. Now, when saving it, it's the last thing we'll talk about today. If you guys want more in-depth walkthroughs, we're happy to do this for you. You want to save, you're going to save the case, which will house everything for you, and also you can save just the PDF. So once it's saved, you'll see it over here. Here's the case file. So if I exit out of this, I'll be able to open it back up and basically resume my work on all of the illustrations that I had. Maybe I had some up there that I didn't intend on using. I was just kind of playing around, seeing what pricing was. But if I decided, hey, we're just going to go with this one. Here's the illustration. I kind of have it broken up differently here. Here's the PDF that you would then show with the client. So there's 2 options where you can save the case, save your brain, your brainstorming ideas there, and then save the PDF when you're ready to go for it. And I'll look up to here, because like after I added my name, you see like I put my own name on here for Rodney Cyrus, the best advisor ever, insurance agency, and you can go through it on that. Now, to pivot from this, once we're ready to look at an application, essentially I'm going to take you back to the same landing page. So from the website, products, everything is the exact same. We're coming under life insurance. Now, instead of coming to the tools and illustration, I'm going to take you to the right, and you'll see the iPipeline e-apps. And then, again, just follow that to this landing page. Now, if you want a term quote, but most of us are probably going to the middle one here, which would be the iPipeline application. Now, I brought this up because I wanted to show you here, start new case. You can also save your cases halfway through. So I think I was doing one, oh, it expired on me. But you can, I'm clicking around on this too much. I'm sorry, I lost which one I was on. We're over here. All right, sorry about that. So once we're on here, you can start new case and fill out the client's proposed information, state, product, and then you'll be able to find available products from there. You can go through and fill out as much as you're going to know probably a lot of the application questions to answer. So you can actually fill a lot of this out and save it. And then when you come back to this landing page there where you saw view my cases, as it's just taking me there now. That way you're not sitting there with the client trying to fill out the entire app. I'll take us back to this. So here you'll be able to view any cases that you had already previously saved but had not submitted. So I'm meeting with the client tomorrow. You can fill out the app as best as you can. And then when you meet with them, you come in, view my case, they fill out whatever the parts they need to fill out. And then that way you can save time in that aspect. So once you hit submit and it goes to the client to sign, you're going to be locked out of seeing it until the client signs their part. Just had that come up recently for us too. Last thing I'll touch on for us here is, Dave and I as a group, we just wanted to kind of, reiterate how excited we are to be working with you all. And we have a lot of free tools. We base everything on really being consultative and educational as best we can. We know all products are shades of gray. We're just trying to show you where we win and where we fit and the type of clients that, really fit our business. So there's no really misalignment as far as, expectations. Within our free resources that we have for you, we have an advanced consulting team. Most of them are JDs, and I'll zoom in on this because this is a handbook of marketing concepts that we have. It essentially can just high level show you, break things down, very visual. And I like it because it shows visual aids as well. But if any of these things come up, someone brings it up, you can always give us a call, shoot us an email, schedule an appointment with our advanced consulting team and kind of really learn more. So this may open up books or I say clients that you previously may not have worked with before or felt like you were able to work with. Give us a call. We might be able to find something to help you out with that. Now, one crossover that we know we're passionate about long-term care, and a free tool that we have is our long-term care and our healthcare cost assessment. Now, this is a sample report, but it's something that we think could probably be utilized with you all day one. You don't have to fill out the wholesaler name. Don't worry about that. But some of us are in senior sales already. So if you're looking for some help, a free tool for the Medicare costs, come get this from us. And then if you were curious to know, you can also check the box for the long-term care cost or do both. It's always a good idea to maybe fill one out on yourself first. That way you kind of get an idea. It's never, I'll get into it. It's not very really invasive. As you can see the questions, you might even know most of them. High blood pressure, cholesterol, diabetes. The only ones you probably may not know off the top of your head is maybe cardiovascular or really maybe cholesterol. But client, you can put the client's responses here along with the spouse's responses, names, and where they want to retire at. Maybe the grandkids are in Arizona, so you want to compare two living states and areas for them that will break it down in the report for you. And this annual income in retirement is the last section. This is much more tied to those healthcare costs. And this is probably a report you would want to fill out before they come in to meet with you, but takes about a few days to get. As you can see, though, you'll get a breakdown of essentially, this is their answers, a breakdown of the healthcare expenses in retirement per spouse, the average annual expense in a 5-year period, the expense detail, and that's just the healthcare stuff. Then you start in on the long-term care expenses. And what's good about this is really kind of hammers in some of the unknowns, right? So based upon Jim's answers, this says here that he most likely will go on claim around age 77 because his life expectancy is age 80. These are what the monthly costs are today with the annual costs. And then we use a projected inflation rate that's relative to the area that the client's living in. And then we will project out what those potential LTC costs could be for home care, assisted living, and nursing home at his age 77, which would in this case be 2037. His wife was a clean sheet no on everything, so her life expectancy is not till age 90. Therefore, she may go on claim around 87. So you'll see her costs are the same, inflation rates are the same, but because she's starting 10 years later, she has more LTC costs that could potentially arise for her. But it's, again, a free report. You fill it out. We send it to you typically 3 to 4 days to get back. A lot of times it works well if you want to give it to the clients before they meet. That way they can come in and be prepared to talk about it. Or, as we all know, your chance of landing a client, if you can meet with them twice, goes up exponentially. So maybe something presenting while in the meeting as a hook to get your second meeting of, hey, let's fill this out, submit it. And then when I get the report, I'll reach out to you and we'll circle back and kind of review it. So this is more slow speed. This would be our NASCAR speed. To LTC cost estimator, takes it to an LTC map, some more QR codes for y'all. If you are in the App Store or Google Play, you can use this code to get the app for free or use the web version. I like this because it's interactive. So if you're having a conversation with the client and it pops up and you want to have a nice visual representation, it's essentially the same thing as the report, except you're telling it what year to take a peek at. So instead of having something that says, hey, most likely at age 87, you're kind of saying, I'm going to go just take a peek at it at whatever your age 80 might be. And then you're kind of filling in some of the blanks, but it's good for on the move. One of the last things I want to touch on here, we have the exact same thing on our Social Security report as well. So a big question for people is, when do I file? Well, they can fill one of these out, and then we'll provide a report that gives you different strategies on when to apply for Social Security or how to do so. But again, it's all free, and we even have teams that will reach out to you afterwards to help make sure that you understand the report, you're confident with the report, and we'll offer any sort of that stuff. We also love to help with this type of stuff too. So we're always happy to reach out as well, or reach out to us. We're always happy to help as well. And the last thing I will pull up here for us is Dave has been very kind for us to create a digital marketing page that has, I'm going to pull up a QR code. Last one for you, I promise. If you would like to access I'll take this off the screen, sorry. When accessing that, you're going to come to a page here. It's our nationwide digital sales library that Dave has created for us. So if you wanted to see more pieces on the LTC rider, you can see over here, it'll only allow us up to 3 thumbnails. So you'll see a +1 over here. If you're interested to learn more, you can click the view all. These are all downloadable via PDF. Since we know we're kind of covering everybody here, we have some California-specific materials, along with some New York-specific materials, and Florida, as they tend to have their own rules and regulations on some things. How the LTC rider obviously works differently with our survivorship. And there's 3 more options in here. General LTC white papers. So if you're curious to learn more or have a question about something, a lot of our white papers are offered here. We have more than, there's 13 or so in here. Some presentations, sales ideas, questions about underwriting, and any of the live product information. We'll be coming back through and adding in the LTC reports and the Social Security report. But as far as that goes, that would be my time, and I'll pass it back over to Dave.
Thanks, Rodney. Mike, before I turn it back over to you, I just wanted to touch base upon licensing and training. Obviously, for the life insurance, you need your life. Most states require your health as well. And then any long-term care state requirements. So a lot of times that is, some initial training, 8 hours, 4 hours, depending on the state, with some continuing education along with that as well. We will add that piece to our digital marketing page as well. but I also want to make sure from a state availability standpoint, New York, the rider in New York works a little differently. So we can talk about a different time. From a survivorship product, the survivorship product is available in California, but the rider on that product is not, and it's not available at all in New York. We also do not have any of the long-term care solutions in most of the products in the state of Montana because they require unisex rates. And we do not have product in Puerto Rico, Virgin Islands. So with that, Mike, I'll turn it back over to you with any questions. And we thank you again for the time today.
Absolutely. Appreciate you guys making your time available. Courtney just popped up a slide here that outlines our bonus offers that are available to everybody on the call today. You can read, so I'm not going to read for you, but no better way to get that first app pulled together, and it's any of the different nationwide pieces are eligible for that $500 gift card for the first agent that's contracted with us, obviously, and submits and issues one of these applications on the Care Matters group or with the Life Hybrid stuff as well. It's got to be done within the first 90 days. Contracting's got to be done yet here in the month of June. The marketing team, we will be reaching out to everybody that was on the call today, get any questions answered because we're almost at the end of our hour here. Answer any questions that you might have, make the contracting available to you so we can get that particular piece started. Compliance is such that contracting's got to be done and completed before we're allowed to do anything as far as illustrations or position agents to be out there soliciting business. That's a requirement in virtually every state. We honor that, so just be apprised of the fact that we've got to get that taken care of to keep all of the lords of compliance happy with that. So with all of that said, thanks to Courtney again for putting this together. She does a phenomenal job of making sure that all the details get handled. The nationwide team, Jeff Sabota, Dave Lane, Catherine Coons is a late addition, but she was here with us. Thank you, Catherine. And Rodney, the self-proclaimed humblest person in his position in the market. Rodney, we appreciate you not only being honest, but being humble with regard to that. So thanks to everybody that participated with us here today. We appreciate that very much. We will look to be in contact, get questions answered, et cetera. So with that said, thanks everybody. We'll talk to you soon.